Greetings from the Commerce Society of SRCC. We are back with the second episode of our latest podcast, The Bigger Picture. Well, this podcast is all about the dark side of trading and finance.
Today, I, Manya, with my co-host Shashank, would like to welcome our guest speaker, Mr. Abhishek Kar, who is one of the most followed finance influencers in India. He has more than 1.2 million followers across social media platforms, including 650k plus on YouTube. He has been a guest speaker at many prestigious colleges across India, including top IIMs, IITs, and top management colleges. He is also a prominent TEDx speaker and a stock market enthusiast. We feel great to host such a diverse and proficient personality.
We welcome you, sir.
Thank you so much for inviting me.
Well, first of all, I would like to know about your experience towards trading and why did you get into stock market and the field of finance?
So it all started during my graduation. I'm a commerce graduate who has done BCom honors. So during that period of time, we had a subject called business studies, and there was one specific mention around capital markets. So one of our faculty members had actually given us an assignment around capital markets, and during the research itself, I stumbled upon the name of the legendary Warren Buffett. And while I got to know about him, I did realize there is someone out there who is making incredible sums of money, that too from a place called stock market. So that was my first introduction. Later on, while I was supposed to go for my post graduation, there was like 1.5 months left. I could see a couple of my friends who were actually going out for one particular manager. So he was an HSBC fund manager who was trying to teach a few concepts practically about stock markets and commodity markets. And since my parents are from biology background, but academicians, so they never told me never to go for any study or certification. They were always on for those kind of things. So I decided, okay, let me just try it out. And the initial first few days were obviously boring because those were more of theoretical aspects. But then eventually, on the third or fourth day, I was introduced to the terminal, which was having all those numbers going bonkers over there, and that is where I realized that trading could be really fascinating. I immediately went, opened up an account. Long story short, for the first 4.5 years, I was like kind of break-even trader. I couldn't make a lot of profit. It was sometimes profit, sometimes losses, sometimes profits. But then after 4.5 years, I could eventually start making profits after understanding the game, and there was no looking back.
So basically, you are from medicinal background and you came into the field of commerce. So that's a very diverse thing to like see in India today. Because if my parents were in the medical background, they would obviously have pushed me into the medical field as well. So, you must have an experience of about 10 to 12 years in the field of trading, right? So, do you think that finance and trading has a dark side, or it is just what we see like the glorific high returns that we get from trading, from stock market trading, from intraday, and from long-term investments? Is that all, or is there something we should stay safe from, or there is something a dark side of finance?
So basically, every side has got two coins. Likewise, even finance has two aspects. And it's not just about trading and investing. You go into any particular field, there are always two sides of the coins, positive and negative, God and devil. Likewise, in trading, there are some good aspects as well as some bad aspects.
Mm.
So, yes, there are definitely some bad aspects, and it has a long history. It all started with multiple things. So, there was circulate trading, there was insider trading, there was pump and dump, there were so many things which have already happened. Illegal form of trading before dematerialized shares were out there. There were some fake share certificates being issued. So yes, there are definitely some dark sides which still prevail.
Yeah, well,
So, sir, what are your views on the trade-off between genuine investment learnings from financial influencers and misleading posts showing ways to earn quick money?
So first of all, in the age of social media, it's very difficult to distinguish which particular influencer is trying to communicate the right message and which one is trying to have some hidden agenda. And the biggest problem of today's era is we are trying to judge based on a metric of the number of followers. So, for example, just because across the platform I've got 1.2 million followers doesn't make me that yes, anything which is coming out of Abhishek has to be 100% correct. So the very first thing is irrespective of whichever influencer a person is trying to follow, you have to make sure that you are trying to take a due diligence. And how that can be done today, there's a fairly simple idea, that is Google Baba. So if you have any sort of confusion out there, you simply go on Google, try to type down your query, and that is certainly going to help you out there. Second thing is, when we are actually trying to compare between a quick rich scheme, so there are certain indications which should be certainly turn off out there. Let me add up over here. So different platforms have different ways to communicate messages. So for example, on YouTube, a lot of people probably don't know and they call it clickbait, but unfortunately, thumbnails play a very important role. So even if you want to communicate a very legit message, a lot of good influencers also use certain thumbnails which might sound like clickbaity, but it is required so that a person clicks on it, comes there, and then gets the right message. So first of all, don't try to judge anyone based on the thumbnail. Just go and try to view a video. So even if, let's take an example, someone is writing that you can make 5,000 from 1,000 rupees. Just go and check out what this person is saying. Just don't judge it right away, because there is a possibility that person might be talking about a 15-year of compounding cycle. So you got to understand that's one. But obviously, if it is happening on Instagram or Twitter, there is nothing like that, a thumbnail or something. So it could be mostly misleading. The second thing which you have to do is, if someone is promising you outrageous numbers, you need to compare with global standards. So, for example, we talk about Jim Simons is a trader, 66% CAGR over the last 30 years. Paul Tudor Jones, I guess 24 to 26%. Ray Dalio, again 28 to 32%. When you look into these people, you would realize that mostly they're falling into the bracket of 20 to 60%. So when these legends who have proven track record over the last 20, 30 years are able to deliver like 20 to 60%, despite being best into their respective field, having access to the best technologies, best manpower, best research units, if they are able to attain that, if someone comes and tells you and claims that I can help you to make 500% every month, that should be a red flag out there. Sometimes using pure common sense can definitely help you out to come out of all this stuff.
Well, in this answer, you mostly use names of Western investors and Western traders. So, do you think the Indian traders will lack something here, or like is that something like that? Like, what are your
So,
views on Indian traders and Indian investors? Yeah.
What we lack in terms of experience for sure. So if you compare the Western economies and their stock markets from Chicago Stock Exchange to others, they have a proven history of 100 plus years where they have formalized their structures, they have good derivative systems, they have good risk management places at places. So India was typically little late in terms of formalizing the entire structure. Till 1992 late Harshad Mehta era, we could clearly see a lot of scammy things used to happen out there, and that continued till late 2000s also. So slow progression actually is one of the reasons why it would take another 10, 15 years for us to have decent stock market example. Another thing is, although we have certain names, late Rakesh Jhunjhunwala sir, Radhakishan Damani sir, who's still present, Ramesh Damani sir, and a couple of others. And if you deeply go through their histories, you would realize that they all have traded bigger accounts at some point of time. In fact, late Rakesh ji always used to write, I'm a trader first and then an investor. But it would be a very injustice kind of thing if I actually try to give their examples with the help of technical analysis, because there were a couple of loopholes at that period of time which they actually exploited. And that is how they created huge sums of money. So that is one of the reasons why I didn't name a lot of Indian investors, but traders. But yes, sooner or later we'll have a couple of good Indian traders, and hopefully you can see my name also there.
So you mentioned some loopholes while trading. What are the loopholes that you mentioned, and how does one prevent themselves from falling into the loopholes?
Okay. So we'll quickly point out a few loopholes. So I named something called circular trading. This used to be quite predominant during Ketan Parekh era. What a circular trading is, basically you try to inflate the volumes of a particular stock, but it is you who is only buying and it is you who is selling. So let's say you both actually decide that there's XYZ stock and we need to manipulate it. So what you will do is you will actually buy that stock of 10,000 quantities, and just 50 paisa above you are going to sell that stock again. She is going to buy, then you are going to sell. In this entire process you guys are not making any sort of money, but what you are trying to generate is inflated volumes. Now someone who is sitting on the outskirts could see, oh my god, suddenly this particular stock is buzzing because this is having a lot of volumes. So now by creating fake volumes, just like people create fake demands, like influencers make fake followers. Likewise, you can have now suddenly real demand coming over there. And now what you can do is maybe you both had some good amount of stocks from 2 years back, which you are not able to dump. But now that original demand actually comes, stock starts moving up and you can dump. So this was circular trading. It is still prevalent in small cap stocks. Another one is you actually talk about, we call it as a pump and dump kind of scheme. So what happens is, let's say you both decide that you are holding certain percentage of particular stock, and now you want to dump it to the normal retailers. What you will do is you will try to spread a lot of rumors amongst your network. You will get some false reports from some chartered accountants as well as some international media agencies claiming that you guys are going to have a merger or acquisition, some international entity. So now the sentiments would be positive. You will try to create a lot of these kind of news, try to spread it amongst the brokers, and then what will happen is you will try to dump it out there. That could be second. Third one is these days there's a concept called zero brokerage. A lot of people don't understand this thing, but how they are able to do zero brokerage is there is a certain amount of arrangement which is done with the exchanges and the broker. For every 2000 crore turnover, they're actually going to pay them some XYZ amount of. So it comes around like, let's say for 50 lakh, they pay 50 rupees. So the exchange is actually going to take 50 rupees from the clients, of which they're going to pay 20 rupees to the brokers. But there has to be a minimum commitment of 2000 crores per month. So there are these zero brokers who know that yes, people will be anyways fascinated towards us if we are giving zero brokerage. But then the kind of humongous turnover they create, they are able to make 50 to 60 crores a year by simply zero brokerage plan. Now, what you don't realize is your information can be sold to anyone. There could be some sort of loopholes. Recently, a certain company had shown this particular 3 4 days back. This incident happened where for the entire day the systems were not working properly, and there were some ghost trades being entered. Ghost trades means you had 100 quantities of XYZ, but suddenly you can see 500 quantities. So those 500 quantities are actually not there, but you can see out on the screen. Now, in order to get rid of this thing, in a panic situation, you will sell 400 quantities to come to the net of 100, but these 400 are now your real orders. So unnecessarily, you fell into the trap and you sold some extra 400 and you incurred losses. So these all kind of repercussions actually happen out there in the stock.
So now I think that rather than being an investor or trader, I should more focus on being a brokerage firm that will not only grow my network but also, generate me huge profits. Well,
Absolutely. Brokers are anyways into a win-win situation.
well, jokes apart, is this not illegal? Like, if a brokerage firm deals with the stock exchanges like the NSE or BSE, is this not illegal in India?
No, it's not illegal. There are certain arrangements. At the end, even the exchanges want to make certain cut some money, and because of that, they want to entertain people to bring more of the turnover. That is one of the reasons there are these arrangements being made, and it's not illegal for say.
But if the National Stock Exchange is dealing with the brokerage firms, well, the general traders or the investors should be aware of that, right? Like, I just got to know about this that the brokerage firms also have a business deal with the stock exchanges.
So basically, what happens is there are a lot of arrangements. This was just one of the arrangements which is done, which at the forefront, even the exchanges or the brokers don't feel like putting it in front. If you actually file an RTI or something, you will definitely get to know about this thing. In fact, on certain websites, you can find about these things. But there are so many intricacies. See, financial markets, specifically in India, are having so much of intricacies as well as gray areas that if we start exploring one by one, you will find n number of things out there. So, and moreover, for general masses, maybe this particular information is not that important also, unless you're trading with a bigger scale. So that is one of the reasons maybe the exchanges think that, okay, it's not necessary to inform everyone. But if someone tries to do a deep down research, they would definitely find traces of these things happening.
Okay, sir. So, as you talked about social media marketing earlier. That is like it is becoming a more critical means of promotion in the space. Getting advice from social media has become a norm nowadays. So, what do you think the reliability of such advice is?
So first of all, because there is no proper authority to set up a guideline for a lot of influencers, you should not be 100% sure that whatever you are being served over social media is completely 100% authentic. You also need to understand that since I come from both the areas of trading and investing as well as from the influencer side, an influencer is not doing everything for free of cost. You are watching reels, you are watching YouTube videos, doesn't mean that, you might think that, oh my god, this guy is so legit, he's giving us so much for free of cost. If something is free, you're consuming something for free, you should understand you are the product for the same. So what they're trying to do is they are probably trying to plug in certain product type, maybe a celebrity endorsement during a podcast or something. Just a standard disclaimer: 70 to 80% of the podcast you see, which are the famous ones, are also paid ones. Specifically, some spiritual ones, even the finance ones. So a lot of them are paid ones. So you got to understand that these things happen. So what happens is, because the influencer also needs to take care of the bread and butter at his own house, and he or she needs to take care of their this thing. So what happens is they're trying to sometimes communicate certain information which gets blended with the brand promotion, or gets blended with that proper authority with whom they are trying to do the podcast. So you may not get the clarity out there. So as I recommended at the start of the video, it's often good whenever into a state of ambiguity or confusion, just go and check on Google with the various facts. So let's take an example. An influencer says that the best way to do intraday trading is by using VWAP. All you've got to do is just go on Google and try to find out what is VWAP, how VWAP actually functions. You will get 10 relevant results. So this is something which you really got to keep in mind. Second thing is you need to use common sense. If someone is, as we mentioned, inflated numbers, yeah, that's a red flag. If someone is constantly trying to show a lavish lifestyle, that's a big turn. Because if someone is trying to show a lavish life, that hey, see, this thing actually changed my life, and at the end, if the pitch is okay, with 5,000 rupees, you can also buy this module, and I'll help you out. Come on. If someone is actually staying into a lavish house of 20 crore rupees, that person is not going to pitch you for a 5,000 rupees course to tell you how you can also become an owner of this kind of house. So these are definitely, so lavish lifestyle. It's a big turn off. If someone, because you wouldn't ever find, I often say, you wouldn't find Ambani or anyone in front of Antilla dancing on Kacha Badam and then putting up a reel on Instagram. You would never see this thing. That only happens on Instagram millionaire kind of thing. So you avoid lavish lifestyle, avoid outrageous numbers. Third thing is try to observe that particular influencer for a decent period of time. It should not be just like two or three reels or two or three videos. You should keep on observing. Yes, no human being is perfect. There would be certain flaws. So, for example, my YouTube video viewers, my constant YouTube viewers, they very much know that yes, Abhishek is probably going to promote or pitch certain product and this kind of this thing. So now they've got used to. They even know at what time I'm going to plug in over there, because in my live videos I myself tell them that, guys, if you want to skip, you can definitely skip. I don't care. So that's the kind of relationship. So it's very important that you have that rapport. It should not be completely dark. That if I am trying to promote, so for example, a lot of people know that I promote two particular brokers quite often. So my audiences always know, because I'm an affiliate with them. They already know. But now if someone is asking me on a live that, are you guys promoting that product? And if I say no, I don't promote, I'm genuinely, so that is completely wrong. That's a complete red flag. That, hey, how come you can say you yourself are already in five of the videos every month you talk about that broker, and then suddenly you say. So you keep observing, and that is how you build that trust and you understand. So these are a few things which you've got to keep in.
Like like people generally follow investors and influencers on Instagram now, and most of the influencers, they do not preach the correct thing to us. So do you think the government or the legal counsel should get involved into this, or is this has already happened in the past, or like something like that?
So the advertising council, which is actually trying to take care of whatever is happening on the social media, has already started taking initiative. I was on the panel representing the this thing influencers last year, and that was a very closed group discussion where they are going to impose certain rules. And now they have started putting this draft and these rules into imposition. So, for example, if an influencer is trying to mislead its audience with certain promotion and not mentioning about it, he could be penalized. He or she could be penalized with more up to 10 lakh rupees as a fine. They can even be banned. They are using AI based tools. These tools are actually constantly looking out for influencers who are deliberately trying to push in creepy products, crappy products, and without even giving a standard disclaimer that this is a promoted one. So in this case, penalties: one, second, repeat offenders, a list would be made, which would be publicly mailed to most of the brands. And if a brand is particularly working again with those particular influencers, the brand would be penalized. So eventually, the Influencer is not going to get any such kind of brands anymore. So these kind of changes are actually going to take place eventually. This will take some time, to be very honest, but yes, these kind of changes are definitely taking place.
Okay, so what are some decisions that we should keep in mind while taking investment decisions? Like, is there any shortcut to make money? Because as a student, I'm always looking for some short things or easy ways out, so that like I can do my work with more efficiency.
So there are no shortcuts, I would say, but there are smart ways to make money. What you guys can do is in your student era, one, you can definitely look for freelance activities. So because you guys have some time at your disposal, so there are certain websites, for example, elance.com, freelancer. So you can definitely go out there, hunt for some freelance activities based on your aptitude and based on your own capability. Someone might be good at coding, someone might be good at accounting, someone might be good at research work, someone might be good at content writing, graphics, animations, video shooting, photography, etc. So there are n number of examples, and people definitely get paid really well. That also has to create a portfolio out there. So that's number one. Second, yes, lately a lot of things have actually worked around passive income. Passive income, people should have passive income. The reality check is until unless you don't have a decent size of active income, you cannot generate a decent size of passive income. So for it's better to focus on studies, get a decent placement, get a good amount of active income, and then focus on passive income rather than straight away starting with this thing. Third one, you can look around for creative ways. Now, creative Indians are really big jugadus. So you can definitely find out some creative ways in order to make money. You can go on LinkedIn, try to offer your expertise, your consulting in terms of research, and there's a lot of demand out there if you are actually hitting the right audience. So yes, there are a couple of things which you can do. So I would say smart works are there, but I wouldn't say they are definitely shortcuts.
Well, you mentioned about websites like Freelancer and Elancer and all that. So, clickbait is a very common issue in these websites, and like even I tried using freelancers, I guess few months back when I entered into my college. So I got an offer from a person. She said that you have to write a particular essay on a topic, and she'll pay me 1,000 rupees for that essay, and but I'll have to do that in an hour. And she asked my bank details, and also I first of all I thought that like it's good, like if I'm earning 1,000 rupees in an hour, that's fine. I should like take that job. But then one of my friends, he pointed out that she's asking my bank details. Like some like employer should not do that at the starting of the start while like creating a business deal with me. So that is something we generally lack. We students lack. We get into the bait of these fraudsters, and we take these jobs, and after they ask our bank details, we get into scams, and we become victims of these scams. So what are your views on that?
First of all, if anyone is asking very personal details right at front on social media, irrespective of where they're asking, you should completely avoid. So you should avoid giving OTPs, you should avoid giving sensitive informations like Aadhaar card details or PAN card details. You should avoid even giving banking details because these are very sensitive out there, and you should not actually go straight away to a stranger and then simply just because that person is promising to give $1,000 or 2,000 rupees, you should actually trade off that thing. So that's the number one thing, that you should never ever share OTP, and the second one is never ever share this personal details. Third, in this case, because you're talking about on the freelance aspect, there could be even better ways. So let's take an example. You guys can actually come up with an agreement out there that okay, give me the details of your website, details of your location, detail, phone number, and everything, so that you can actually cross check it two, three ways. So let's take an example. If that person is probably staying in Mumbai and if you have a friend around there, you can just randomly ask that if is it possible just to get a visit around that office. Don't go inside the office. Just let me know if that office really exists out there or not. And so that you have a double confirmation. If you can't do that, at least you can do a telephonic check by looking at Truecaller or something else so that you get a clearer picture out there. Because Truecaller these days is very smart in the sense a lot of people mark spam a lot of numbers, so that does help out there. So if you do a few quality checks out there, I guess you can save yourself from all these kind of scammy things.
Sir, in addition to this, like online gambling, like 40% of Indian population actively engages in online gambling. Despite most forms of gambling being illegal in India, there have been zero contributions to prevent this. In your opinion, what are the ways to prevent online gambling?
So first of all, the sad part is, unfortunately, a lot of celebrities have actually introduced gambling, which is not right. Possibly because they probably think that they would run out of money and their career is very short-sighted, and that's why they want to grab as much as possible in the short stint, which is completely wrong because they don't realize the kind of influence they're going to have it on the youngsters. So what ideally should be done is, obviously the ad agencies are trying to keep a tab over this thing, but it's not that easy to control the greed factor of the human beings. Parents should take control of this thing because mostly what happens is they hand over the kids their cell phones, thinking that okay, we can focus on our work. In the meanwhile, the kids, while even watching a YouTube video, suddenly an ad pops up talking about certain gambling website where you can put $1,000, make $20,000 in a day, and that is what actually crushes the minds of the students as well as a lot of youngsters. So first, responsibility has to be taken care of by the parents. Second, we have to use our common sense. We have never seen any millionaire or billionaire who actually became so by gambling. So you got to understand this thing. You can never find a picture. In fact, if you look into surveys being made into the West, 75% of the lottery winners who made, irrespective of whatever they made, 10 million, $100 million, 75% of them lost entire sums within 1.5 years, which is clearly evident that it's not easy to take charge of this kind of money. Third, why to sacrifice your entire career for something which is already illegal? Because the moment you will get caught, and don't think that our judiciary system won't be able to catch you. Maybe today you are completely safe, but what if after 10 years they catch hold of you? Because since it's illegal, you can be thrown behind the bars. A lot of wrong things can actually happen out there, and you will completely ruin your career. So you need to ask yourself, are you ready to completely put your entire life on stake just for this gambling? So I would say that this is something which would come with own self awareness, as well as people like us need to make people aware about these things.
But we know that online gambling is illegal in India, but there are various apps that promote gambling, and also currently we all know that IPL is going on, and people put a lot of money on teams. They create teams on those apps, and they bet on the players. They like put on money on the players and their team. So generally, I see that teenagers of my age, they do this thing. So should, like, how can we prevent this? Like, this is a very taboo topic. Like, people generally don't talk about this, but they do. Like, they when they watch the match at 8, they are obviously, betting on teams. So
So it's as simple as that. Behind every cigarette packet, also they have this picture of the lungs, which clearly says that cigarette smoking is injurious to the health. Irrespective of that, and so much of awareness for the past 2 decades, people yet still smoke. So no matter how much we try, obviously we should try, but there would be still greedy people who would fall for it. Those who are in desperation to make money. We can't take control of that. All we can do is, at least in our circle, in our family circle, in our friends, in our cousin groups, we can actually let them know that what are the repercussions of getting into any these kind of gambling, because gambling is also not like anything like a cocaine or something. Once you get addicted, you cannot let go of it. And history has repeatedly told, you just see in Mahabharata, because of gambling only, they lost their entire empire, and that entire Mahabharata happened because of that gambling activity with Shakuni Mama. So history has complete evidence out there. If you go that side also, that what has gambling actually done to a lot of people. So if you don't go with the modern day version, you can actually go with the ancient version, which clearly states that gambling is very injurious. So you should definitely avoid gambling.
Okay, so moving on, what are your views on insider trading and Ponzi schemes?
In addition to her question, I recently watched the film Wolf of Wall Street. So in that, the movie mostly revolved around usage of penny stocks and trading around penny stocks. So it's a personal question. I would like to ask: should I more trade with blue chip stocks or with penny stocks? Because penny stocks are a very easy way to generate very quick and a huge amount of money.
I'll answer all those. So insider trading, basically what does it mean is, let's say you know someone from the top management and they know the company better than you. They probably know what is going to be the quarter result, what are the new acquisitions which are going to come. And then they are going to inform one of their friends who is outside the company 20 days prior to that action, so that that person can actually buy a lot of shares, and eventually they make profits and they share a cut between them. So that's the insider trading. Rajat Gupta, who was the CEO of Goldman Sachs, one of the biggest investment banking companies in the planet, and the founder of Indian School of Business, which is a very prestigious college for providing MBA, unfortunately fell in trap of this insider trading. Again, greed. Just imagine a CEO who was already earning probably a few crores every month still gets into insider trading to earn a few multiple more crores. And then he was behind the bars, I guess, till 2016 or till 2018, he was behind the bars. So you got to understand that insider trading, retailers obviously don't have access to this kind of information. But these days, the exchanges do provide the data on a monthly or a weekly basis where you can see what insider trades have been taken by the internal management on a particular stock. We should not think that we'll be able to do insider trading. It's a big game, but yes, that game is still being played. Our regulators probably need to become more efficient in order to catch hold of these kind of transactions. But SEC out there in the US, they are little more stricter and they are able to find out a few people who have done this thing. So that is insider trading. Now talking about Ponzi schemes, yes, I talked about circular trading. There is again a pump and dump wherein let's say you both hold XYZ percentage of a particular company and now you want to just dump this up to the normal public making a profit. You might talk to a few brokers, a few agencies, create some false reports, get some false audited reports, create a perception that you guys are merging with a big international company because of which the valuation will go up. Eventually spread rumors with the help of maybe again social media influencers as well as a lot of TV channels. Yes, social media influencers are also getting involved in this. And then finally, one fine day, you actually, once the share actually starts going up, you're down. So this is one scheme where people get actually betrayed. Another one is where people actually promise outrageous returns on various stocks that you give us some XYZ funds and every month we are going to give you this and this kind of percentage. That is pure common sense. When people are saying that on 50,000 every month we are going to give you 10,000, that means every year on 50,000 they are giving you 1,20,000. That is more than 2x. So, as a common sense person, one should actually understand that's not practically possible, and that person is trying to fool you out, and you should avoid these kind of things. That's another Ponzi scheme. Circular trading in the starting, I talked about. Ketan Parekh used to do this kind of trading. So these are a few Ponzi schemes. Now, talking about what you had actually asked about penny stocks. So first of all, Wolf of Wall Street, a lot of people think it's a stock market movie. If you ask from a trader's perspective, no, it's a marketing movie. If you closely observe, what has been shown out there is basically how this gentleman Leonardo is so good with his marketing skills that he is able to negotiate and sell almost everything. There was a part where he was selling penny stocks, then IPOs, then the dreams, then the ideas, then the jets, and whatnot. So first of all, yes, it has been set on the background of stock markets, but it is eventually a marketing story. But now talking about penny stocks come with a lot of risk. First of all, the books can be because you guys are finance student, you should understand that yes, it's very easy to cook the books in small cap companies because they are not accountable to that great extent, lesser number of stakeholders. So kind of so invoices can be fuzzed out there, sales wrong reports can be shown out there. So penny stocks, and plus they don't have much volumes because mutual funds have certain and domestic funds have certain benchmarks that only if a certain company is above 10,000 crore market capitalization, we are probably going to enter. Like they have certain benchmarks, even for small caps. So it's quite evident when big players or big legit companies are not entering, you won't get much of volume. So there is a high probability you might get trapped out there. So my suggestion would be there that although a lot of people think that it's a quick rich scheme, buy a penny stock for let's say 1 rupee, sell it for 10 rupees, you make 10 times out there. It sounds very easy, but honestly, it's not the right approach to make money because fundamentals are missing, history of that company is missing, the promoters can be misled.
Well, this conversation has definitely changed the perception of how I would look at the stock market and the financial world. I guess it is the same with you, Manya.
Yes, sir. So, thank you so much for joining us today,
Yeah.
sir.
And we would also like to thank our audience for being with us. So it was a very knowledgeable session, sir, and like we would really thank you for being with us today. Thank you, sir.
Thank you so much for inviting me. Thank you. It was lovely conversing with you.
Thank you.